Let's talk about banks for a minute. They are also direct lenders, which means they lend their own money typically, unless it's a special program that they're working with in conjunction with another direct lender. Banks are federally chartered institutions, and more often than not, or very often, they offer other financial services, CDs, IRAs, things of that nature. So the mortgage piece is generally just a small portion of the business that they do. So with that being said, they may not always necessarily be the greatest with respect to a timeline or getting everything processed. While they have dedicated loan officers and things of that nature, it's been of my experience over the years that banks tend to move a little slower than mortgage brokers and obviously mortgage companies, because they do so many different things. Okay, let's talk about credit unions for a minute. Credit unions are direct lending, which means they lend their own money once again. They can be great because they come with lower rates and lower fees. And generally speaking, they're easier to work with or more personable because you already have an established relationship with them. A potential downside with the credit union is that the programs that they have, or the loan programs that they have, may be more restrictive or not as vast as you would find with a mortgage broker or a mortgage company. Okay, so they may be a little more conservative with the packages that they offer. The other side is that, generally speaking, they're smaller, so they don't have as many branches, and they may have limited operational business hours. Okay, let's talk about hard money lenders. They are direct lenders also, but they take a different approach. They collateralize or secure the loan with the property itself. So their main concern going into a deal is, what's the property worth now? What's the property going to be worth after it's rehabbed, or ARV, if that's the situation, if that's what's happening. And that's generally what you're using a hard money loan for, is to purchase and rehab a property. Your credit score does matter, but you don't always need a lot of money to get into a hard money loan. The key to this is finding a property that makes sense on the front end and on the back end after rehab. Their main concern, once again, is collateralizing the loan with the property. If it doesn't work, they will take the property back, no questions asked.